Good evening, traders. 7-minute market recap, May 12th, 2023. Let's get into today's playbook. Before we start, we usually go over the daily, but there is so much going on, it becomes difficult to squeeze it into 7 minutes. However, what happened today is very interesting and worth discussing. We have the 3 ways that the market will move up, down, sideways from our book, and also the 7 market moods that will occur at any one time to let us know what our trading priorities should be. As we go over in detail, 7 market moves: 1, trend; 2, trend pause; 3, trend continuation; 4, congestion; 5, congestion exit; 6, trend continuation; and 7, trend reversals. At any given time, the market is occupying one of those 7 moves, which would let us know what our trading should look like. So, in addition to the moods, we have 2 other things that are worthy of discussing, which we'll get into. Number 1, the characteristics of the market, and 2, the habits of the market. So what are the characteristics? Each individual market, whether it's gold, whether it's the silver market, whether it's commodities, whether it's the foreign exchange, is going to have its own particular characteristics. This is the benefit of focusing on one market and learning its characteristics in and out. A market becomes, to some extent, like a human being. They have predictable patterns, they have predictable personalities, and they have predictable outcomes that we can look at. And that's the benefit of staying with one market. Our program, we only focus on one market, which is the Emini S&P, which is a microcosm of the S&P market, and the principles that we go over also apply to the micro market for the S&P. So, what are some of the characteristics to pay attention to? The characteristics are how a market will move, what type of range it will go throughout the particular day, how it will move. Will it move in short bursts, or will it move in slow, continuous movements? You have some markets that move slow, like your gold or your oil or your silver, and then you have markets that move very fast. So our particular market is a good combination of both. It's fast enough to get good liquidity and good movement for intraday trading, but it's also predictable and it has patterns that it builds up over time. So the E-mini is very good for that purpose. But then what are the habits of the market? Habits of the market are things that the market will continually do, that we can expect, that we can lean on, and that we can make choices based off of it. Just like a person whose habit may be to go to the gym, to go to work, it's predictable. So if we want to know where that person is, it's very likely, it's highly probable that that person is going to be at a particular place based on what their habits are. The markets are the exact same way. They have a habit of doing certain things. So with that being said, let's get into what happened today. And as a backdrop, today is a Friday, May 12th. And the E-mini market has a very interesting tendency on Fridays, especially after a congested week. And the habit is that it seeks to make a statement. And the reason for this is some technical, some psychological. On the technical side, the institutions, the large providers are looking to clear their trades, basically. They don't want to take trades into the weekend. So their back gets up against the wall on Fridays, so they have to make a move. So if the market was not giving any direction throughout the week, Friday could potentially be a day where there is an established sentiment for what the market is going to do. And that's a consistent habit that we see in the E-mini market. So that being at work today, let's get into the daily chart and to see what was going on. We had factors at work today that guided the trading that we were involved in. First factor is that we had a week of congestion. Looking at the daily, we can go back today, Thursday, Wednesday, Monday, Tuesday, right here. And we have a sideways market, which we're going to get into more in our program in terms of what we're actually looking at. But these dots here are trend dots, and they give us an algorithm which basically takes the activity of each candlestick and points a dot. So over time, we're able to look at those dots to see what type of market we're in. We can see a clear trend here, clear trend here, clear trend here. Going into the last 2 weeks, we see a sideways market. There's no trend here. So we have to adjust our methodology to this sideways market. So that's one factor that's involved. Another factor is that we are bumping our heads up against a zone which has not been breakable for the past almost 6 months, which is a very interesting place to be because it puts the traders in a predicament to decide whether or not they are going to actually break through that market or they are going to break down from that market. And we can gauge the sentiment intraday to see what that outcome is going to be. So putting those two factors together, the fact that the market tends to make a statement on Fridays and that we're bumping our heads up against the wall, we were looking for some type of statement from the market to determine which direction it was going to go into. Doesn't happen every Friday, but there's a high probability that there is some type of statement that's made. Our sentiment was that the market would not be able to break this zone that it's been bumping its head up against for the longest time. And the reason why is because it was a low volume day. To break through a zone, it requires high volume and it requires a lot of traders to be involved, which we did not see today. So we bring in the advanced decline line for the morning, and we see that opening up at 9:30, we were trending downwards, which led us to have a sentiment that we were not going to get a break of that zone. So what is the result of that? We are able to look for shorts in the market, which we actually did. Opening up this 1 minute chart, we had ample preparation time. We had an opportunity to observe the market open here and a continual stream down, which was consistent with what was happening on the advanced decline line and also with the nicey tick staying under zero. Those two indications give us confidence that the market is not going to break through that zone. That gives us the confidence to set this zone as our stop loss point, which we get into in detail in the book in terms of setting a stop loss at the other side of a zone. So we're able to take a short, relying on this zone as our defense, which is our stop loss, and anticipating a short move. And based on the congestion of the market, we're not looking for a extended trend-based trade. We're looking for a short, quick spurt. So we were able to go short, get in and out, and preserve capital. And we see that that was a significant move because the market gave indecision around 2 o'clock and it reversed and went in the other direction. So it was a very consistent day, which was consistent with what we've been having all week, which was we got another hammer, which is basically a opening and close at a similar range. So this bar here tells the complete story of the day. This final bar opens here, closes here, a lot of activity in between. However, it stays within this congestion that we've been in. So we enter into next week without a clear direction. We enter into next week with considerable sideways market. So knowing that, we're able to adjust our style, to adjust our lot sizes to an even larger lot size, knowing that the market is not trending one way or the other. And it removes the emotions from our trading decisions. That's a summary of today. A lot more to get into. Definitely we'll go into more detail in terms of what we're actually looking at. Our ebook goes into details about the market moves, how to read them, how to set up a market sentiment based on the activity of a current day. Gets into the actual charts that we are looking at, the daily chart. This chart here, which is from one of our suppliers, and also these sentiments here, which give us an idea of what's happening intraday. We could see the red indicating that the market is in a downward zone, and then as it shifts during the middle of the day, we turn into a sentiment that is letting us know that the market is ready to head back upwards. So long story short, these algorithms here, we get into more detail and letting you know how they work and what the benefits are. Again, not a red light, green light system, but a system based on probabilities and numerical analysis of how the market is moving intraday. And we'd love to get into more. Love to share more details with you. We have a community where we discuss these things, and we would like you to join us. Give us a like, join us as we go on this trading journey, and we look forward to having good results. Have a great evening.